Hi, I'm Stan The Annuity Man. Today we're going to go over qualified longevity annuity contract rules, which is very important if you have a traditional IRA and you want to set up a lifetime income stream for you or you and your spouse. I'm going to go over the premium funding rules, the rules in place, so that you can do that and have a future pension income stream for both you and your spouse. Also, make sure to watch my video on what is an income rider on an annuity, because that also explains future income. We're going to cover a lot today concerning QLACs. First of all, I'm going to go over what is a QLAC, what are the rules of a QLAC, how do they work, what's the benefits, what's the limitations, where do they fit, how do you get a quote, how do you structure it, everything you need to know, and then obviously where it fits, and even if you need a QLAC. And also at the end, I'm going to tell you how to get my free book that I've written on qualified longevity annuity contracts. It's called the QLAC Owner's Manual, and I'll tell you how to get it for free at the end of this. So what is a QLAC, a qualified longevity annuity contract? In essence, it's a deferred income annuity. It's a DIA structure that you can only use in your traditional IRA, not a Roth IRA, traditional IRA, and you can set it up for future income, and you can set it up for just you, or you can set it for you and your spouse or partner for a lifetime income stream that you can never outlive, and you can defer it. So if you're age 70, you can defer it as far out as age 85, or you could start it as soon as age 71. So it's a future pension plan that you can use inside of your IRA. Okay, so what are the funding rules for a QLAC? They're very simple. It's 25% of the total IRA assets. If you have IRAs everywhere, 401k, it's the total of that, 25%, or $130,000, whichever is less. Now, you can have one if you have an IRA, your spouse can have a QLAC if they have an IRA, and you can attach your spouse for joint lifetime income. With these funding rules, I do believe they'll continue to go up in the future, which is a good thing, but for now it's that lesser of 25% of your total IRA assets or $130,000. Give you an example on how that works a little bit. If you have, let's just say you have $1 million IRA, then you can put $130,000 in. If you have a $200,000 IRA, you can put $50,000 in, right? 25% of the total IRA assets. So that's how it works. That's the funding limits. That's what the rules that's been put in place by the IRS and our beloved Treasury Department. So speaking about our beloved Treasury Department and our lovely IRS that we all love, they came up and developed and introduced qualified longevity annuity contracts in 2014. Why, do you say? It's because they love you. Of course it's the reason why. No, here's the reason why. Social Security was never put on the planet for primary pension type income, but a lot of people use it like that. Now there's so many trillions and trillions and trillions and trillions of dollars in IRA money. They wanted to encourage you to look at qualified longevity annuity contracts for future pension income guarantees, primarily because most companies don't offer pensions anymore. They offer 401k type plans that don't provide lifetime income. You've got to convert it to lifetime income. And they also wanted to take a little bit of stress, I think, off the Social Security payments that people get. But qualified longevity annuity contracts are great because you can attach your spouse or partner for joint lifetime income, and that amount that you put into a qualified longevity annuity contract, that dollar amount, is not used when you go to calculate your required minimum distributions. So that's a good thing. So QLACs, qualified longevity annuity contracts, they really kind of solve for two things. Number one is lifetime income. It's an income stream you can never, ever outlive regardless of how long you live. You're transferring the risk to the annuity company to pay you or to pay you and your spouse partner for the rest of your lives regardless of how long you live. And the second positive, in my opinion, about this product is that whatever money you put into a QLAC, that amount, that dollar amount, is not used to calculate R&Ds at the end of the year, required minimum distributions. In other words, the qualified longevity annuity contract part is separate from that. Now, when you take income from a qualified longevity annuity contract, that income stream fully covers the required minimum distributions for the money you have in the QLAC. So the benefits of qualified longevity annuity contracts are numerous. I mean, it does have its limitations. We're going to go over those as well. But understand that you can take your traditional IRA that you own, that's got your name on it, and you can add your spouse or partner as a lifetime income guarantee annuitant. I think that is fantastic. Now, there's trillions and trillions of dollars of IRAs out there, and there's just a lot of people that need future income or want to combat inflation in the future, or there's people that just want to provide a lifetime income guarantee to their spouse. So remember, lifetime guaranteed income is primarily based on your life expectancy at the time you take the payment. That's how they price it. Interest rates play a secondary role. So the older you are, the higher the payments, just like Social Security. If it's joint life, the younger of the two, so life expectancy is going to drive the pricing train. So that's kind of how it works. With QLACs, there's no annual fees. They're very simple, easy to understand. They're transfer of risk products. Once again, you can use them in your traditional IRAs. You can't use them in a Roth, just the traditional IRAs and some 401ks. You can attach COLAs, cost of living adjustment riders, to them if you choose. We can show you those quotes. And most people, when they structure the quote, they structure it so that's a lifetime income payment, but 100% of the unused money will go to their listed beneficiaries, and the evil annuity company will not keep a penny. A couple other things that I think are benefits. Number one, you can ladder QLACs. In other words, you don't have to put the whole amount in one contract. You can say, okay, we qualified for the $130,000 amount, so let's take $65,000 and defer to age 75, and take the other $65,000 and defer to age 80 or 85. So you can do that. You have income starting at different intervals. And lastly, if you structure joint life with cash refund, most carriers will allow you to change the start date one time if needed, which is pretty good. It's flexible. But understand that if you're younger when you start the payment will be lower. If you're older when you start the payment will be higher. Let's talk about some limitations of the qualified longevity annuity contract. Like all annuities, they have benefits and limitations. The limitations are primarily that it's a very rigid contract. It's irrevocable from the standpoint of there's no liquidity. You can't just call up and say, we've been getting these income streams, just send me the money now. You can't do that. And the IRS and the Treasury did that for a reason. They want you to plan for lifetime income. The other limitation that a lot of people don't like, but you need to be aware of, is that during that deferral time period, in other words, you can start the income as early as age 71. You can defer it as far out as age 85. You don't have to do 85. A lot of people think that you have to defer to 85. You don't. 71 to 85 and in between. But during those deferral time period, there's no trackable interest rate. In other words, you can't see how it's growing. Now, the annuity companies do reward you for allowing them to hold on to the money. In other words, they enhance the payment the longer you allow them to hold it. In the South, we said the more it cooks, the more you get. So the longer it's cooking at the annuity company, the more income stream that you get, income payment guarantee. But there is no trackable interest rate, and a lot of people don't like that. All right, so how do you quote these things? How do you quote qualified longevity annuity contracts? Obviously, the obvious choice is StanTheAnnuityMan.com. I'll quote them. I'll show you every carrier on the planet. Understand it's like buying a plane ticket. There's no one carrier that has the best qualified longevity annuity contract. It's a commodity type product. You quote all carriers. And think of the quote as like a gallon of milk. Every 7 to 10 days it spoils and you have to get another quote. So, let us run that quote for you. The most popular structuring choice is either life with cash refund or joint life with cash refund, which means that the annuity company's on the hook to pay you for the rest of your life. But if you die in that fiery plane crash, not to be morbid, 100% of the money goes to the beneficiaries, and the evil annuity company doesn't keep a penny, even though they're on the hook to pay you for life. So that's a pretty good deal. And most people have worked really, really hard for their money in the IRA, so they want to make sure that all of that goes to the beneficiaries. So to go over the rules one more time, it's 25% of your total IRA assets or $130,000, whichever is less, and that's at the time of this filming. So where does a QLAC, a qualified longevity annuity contract, fit in your portfolio? It fits for future pension guarantees, income later, okay? And it also kind of plays a little role in legacy. And let me give you an example. I had a gentleman that had an IRA that had a lot of money in it, but he didn't really need the money. He was kind of a market guru type, but he wanted to set something up for his wife for a future pension plan. So what he did was he bought a QLAC. He bought a qualified longevity annuity contract, made her a joint annuitant, which means that when he dies, she's going to get the payments for the rest of her life. And maybe that's your situation, that You really don't need income in the future, but your spouse might. Also, most people are trying to put in place what I call an income floor. An income floor is all of the money that comes in every month guaranteed. A pension if you're so fortunate, rental income, dividend income, that monthly amount that keeps your lifestyle in play. QLACs can be part of that income floor, and that's what you should use it for. Now, you've made it through the video, I appreciate that, but there's one more step in your education. It's my book, The Qualified Longevity Annuity Contract Owner's Manual, which I will send to you for free under no obligation and cost. All you do is click the button below, fill out the information on where I need to ship it, and it'll come in this really shiny gold foil Willy Wonka package. Since I'm doing you that favor, do me a favor. Join me every week on my new videos with YouTube. I am doing tons of these, and they're informative. They're just like this. It's not salesy. It's the good, the bad, the truth, the limitations, the benefits, so you can make an informed decision on your terms, on your time frame without being pressured. So click the button below, join us every week, and I'll see you next time.